What if 10 years from now you look back at today and realize this was the moment you could have changed your financial future? The moment when the opportunity was clear, but you convinced yourself you had more time. Every generation experiences a few defining wealth-building cycles, moments when ordinary people quietly build extraordinary financial security simply by understanding where the world is heading and positioning themselves early. This is not about luck or secret information. It is about recognizing long-term shifts before they feel obvious. In the 1990s, it was the internet, when average Americans invested in companies that seemed unremarkable at the time but went on to reshape communication, commerce, and daily life. In the early 2000s, it was real estate, when homeownership and rental properties created generational wealth for families who held on through market cycles. In the 2010s, it was smartphones, cloud computing, and large technology platforms that slowly embedded themselves into everything we do. Today, we are standing at the beginning of another major transition, one that will likely define wealth creation for the next 20 to 30 years, and the decisions made now may matter far more than most people realize. This matters because the financial environment has changed dramatically. Inflation has reminded Americans that cash loses purchasing power over time. Traditional pensions are largely gone. Social Security alone will not provide a comfortable retirement for most people. Responsibility for building wealth has shifted almost entirely onto the individual. At the same time, investing has become more accessible than ever. Transaction costs are low, information is widely available, and automation allows people to invest consistently without needing to monitor markets daily. This combination of pressure and opportunity means that understanding future-focused investments is no longer optional. It is essential for anyone who wants long-term financial security. One of the most powerful forces shaping the future of wealth is artificial intelligence and automation. AI is often discussed as something that will arrive someday, but the reality is that it is already transforming how businesses operate today. Companies across industries are using AI to analyze massive amounts of data, automate repetitive tasks, improve customer service, optimize logistics, detect fraud, and increase efficiency. This matters because productivity growth is the engine of economic expansion, and AI represents one of the most significant productivity leaps in history. When companies can produce more value with fewer resources, profit margins tend to increase, and over long periods, growing profits drive market returns. For ordinary Americans, the opportunity is not about trying to identify the next small startup that might succeed, but about understanding the broader ecosystem that supports AI adoption. This includes cloud computing providers that supply the computing power AI systems require, semiconductor manufacturers that design and produce advanced chips, data infrastructure companies that manage storage and connectivity, and established businesses that integrate AI into products people already use every day. Just as the internet created massive value not only for websites, but for companies that built networks, operating systems, and scalable platforms, the AI era is likely to reward those who enable AI to function everywhere. Over the next 2 decades, artificial intelligence is expected to become embedded into healthcare diagnostics, financial services, education platforms, transportation systems, manufacturing processes, and government operations. Investors who gain diversified exposure to this trend are positioning themselves alongside one of the most transformative forces of the modern economy. Another major driver of future wealth is the ongoing transformation of the global energy system. This conversation does not need to be political to be important, because energy is fundamentally an economic issue. Energy powers everything from homes and businesses to factories, transportation networks, and data centers. As the economy becomes more digital and electrified, demand for reliable energy continues to rise. At the same time, advances in technology are making renewable energy sources like solar and wind more cost-effective, while improvements in battery storage and grid infrastructure are increasing reliability. Utilities and private companies are investing heavily to modernize aging energy systems, and this investment is expected to continue for decades. Historically, major infrastructure shifts have created long-term wealth for patient investors. Railroads enabled industrial expansion, highways supported suburban growth, and telecommunications networks fueled globalization. Today, energy infrastructure is becoming the backbone of the digital economy, supporting electric vehicles, advanced manufacturing, and massive data centers. Over the next 20 to 30 years, electricity demand is expected to grow significantly, and companies that can produce, store, and distribute energy efficiently are likely to play a central role in economic growth. For ordinary Americans, participating in this trend does not require direct ownership of physical assets, but rather thoughtful exposure to companies and funds positioned to benefit from long-term energy expansion. As technology advances, real assets continue to play a critical role in wealth creation. There is a common belief that a digital world makes physical assets less important, but history suggests the opposite. Real assets provide tangible utility, income generation, and a degree of protection against inflation. Real estate, infrastructure, farmland, and specialized facilities like data centers and logistics hubs form the physical foundation of the modern economy. What has changed is access. In the past, investing in these assets required large amounts of capital and specialized expertise, but today, modern investment structures allow ordinary Americans to participate with relatively small amounts of money. Warehouses that support e-commerce, cell towers that enable wireless communication, data centers that power cloud services, and utilities that manage essential services are all examples of real assets benefiting from long-term trends. As online shopping, remote work, and digital services continue to expand, demand for these assets is likely to remain strong. These investments are not about rapid speculation or chasing short-term price movements, but about owning productive assets that generate cash flow and retain value over time. Another powerful but often underestimated trend is the rise of individual investing and ownership. For much of history, wealth-building opportunities were limited by high fees, lack of access, and limited information. Today, that has changed dramatically. Anyone with a smartphone can open an investment account, automate contributions, and gain diversified exposure to markets at minimal cost. This democratization of investing has shifted the advantage toward those who are consistent and patient. The greatest advantage ordinary Americans have is time. Consistent investing over long periods allows compounding to work in powerful ways. Small, regular contributions may not feel impactful in the beginning, but over years and decades, they can grow into substantial wealth. This approach does not rely on predicting market highs and lows or reacting to daily news. Instead, it depends on diversification, discipline, and emotional control, especially during periods of volatility. Historically, those who have built lasting wealth are not the ones who made dramatic moves, but those who stayed invested during downturns and continued contributing when markets felt uncertain. Looking ahead, the most important distinction between those who struggle financially and those who build long-term security is ownership. Income alone rarely creates lasting wealth. Ownership of productive assets that grow over time is what builds financial resilience and freedom. This does not require taking extreme risks or abandoning caution. It requires intention, education, and consistency. Ordinary Americans can take practical steps by learning basic financial principles, understanding long-term economic trends, using tax-advantaged accounts, diversifying investments, and committing to a long-term strategy rather than chasing short-term excitement. The future will always be uncertain, but uncertainty does not eliminate opportunity. It rewards preparation. Wealth is rarely built during moments of excitement, but during years of steady, disciplined action. The goal is not to predict the future perfectly, but to own pieces of it as it unfolds, allowing time and compounding to work together. And if there is one final takeaway from this conversation, it is that the next wave of American wealth will not belong only to institutions or insiders, but to ordinary people who choose to start now, stay consistent, and think long-term. And if you want to continue learning how to position yourself for that future, make sure to subscribe for more clear and practical financial insights, and leave a comment sharing which of these future investment trends you want to explore next so we can continue building knowledge together. The future of wealth in America will not be decided by luck, hype, or shortcuts, but by preparation, ownership, and patience. The opportunities discussed are not reserved for insiders or the already wealthy. They are unfolding in real time, accessible to ordinary people who are willing to think long-term and act consistently. History shows that the greatest financial transformations happen quietly, when disciplined individuals continue investing while others hesitate or wait for certainty. You do not need to predict the future perfectly, you only need to position yourself so that when progress moves forward, you move with it. Every dollar invested with intention today is a vote for the life you want tomorrow, and the most expensive mistake is not starting too late, but not starting at all. If this message helps shift your perspective, Take the next step by subscribing for more clear and practical financial insights, and leave a comment below sharing which future investment path you are ready to explore. Because the choices you make now can shape your freedom, security, and legacy for decades to come.